It is Tuesday, April 16th, and after I take you through today's action in the account, I want to talk about price and why it's so important, and why sometimes when you come out with news for specific stocks, they tend to jump up or down very violently, sometimes 30, 50, 100 or more percent. So stay tuned for that. At first, it is not an all-time high. Here's the browser, down currently $340 or so. Some of the big gainers and losers: EXK losing $40. Thankfully, I've scaled so far out of this position that I've only have 400 shares now. Let's actually take a look. Let's take a look of what's happened. It's priced at 226 right now, and if we go to the history, I'll show you how I've scaled out of it. Should have obviously sold more, but hindsight's 2020, right? You can see I sold here 200, 200 on March 25th, 21st, 200 on March 20th, 200 March 8th, 200 on February 26th, 200, right? And you can see the price here, 246, 258, 260, 264, 268, 272, 273, 277, 282. So I've really scaled out of this position, and I've sold the vast majority of EXK, so I only have very little EXK left to show for. Only 400 shares. I sold thousands of the stock now for a profit, which is good. Right now I'm losing on it, but it really doesn't hurt that much. I'm down $40, which is a significant amount. But had I kept all of my thousands and thousands of shares, would have been down not 40 but $400. So I'm so glad I was able to exit that position for the most part. Hopefully, if it drops low enough, I'll be able to scale back in, but I'm not at that point yet. I think there's some more pain to come in the silver, so I'm holding on, and I might be wrong, and that's why I still hold a position. But I've definitely reduced my exposure to EXK. Okay, I still really like the company, by the way. Apple down $32. I made an interesting trade on Apple, which is I sold a long-term call. By long-term, I mean like 3 weeks. Look, it expires on May 3rd. And if the deal here that I made is that if the price reaches 212.5 or over, I'm going to be forced to sell my shares, 100 shares, which is pretty much all of them. And if it doesn't, I get to keep the premium, which is valued right now at $125. So $125 for waiting for a few weeks. And I think it's worth it. 215 is pretty far away. And considering the current market stall, it might last for quite a while, so we don't know. We'll see how that turns out. Let's see, scrolling down. C-SPAN had a little bit of an advance, which is kind of bad for me because you can see how I'm losing here on options. I sold 2 calls against my shares, and they have not decreased in value. They've increased in value. And why is this? Is because it's dividend time. So it's at 10:02, and if it closes over $10 tomorrow, I'll be forced to sell my shares. And not only that, but I'll be on the hook for paying the dividend on those 200 stocks. I'll be paying like an extra $30 worth of dividend to whoever, to whoever. Oh, if that executes. So hopefully it drops a little bit below 10. My deal would be like, $9.99. That'd be great. So we'll see how that unfolds. I'm very curious to see what happens tomorrow. Which is the Realty Income Fund, is down almost $50. That one hurts quite a bit. But, you had such a huge run. I'll show you guys the 3 months here and the year. Look at this. The 5-year. Look at the 5-year. It went all the way from $50 to like 73, over $73. It's a really, really big run in a matter of, a year. That's a really good run. So it's like 40% or something. It's correcting, and that's all right. Other big loser is wheat and precious metals. I was not able to unload as much wheat and precious metals as I would like. I did sell 100 shares at, let's see if we can get to the history here. Was dividend. Yeah, I've been trying to sell calls against it, but it's just not happening, you know? I just can't fill out the order. There's not enough liquidity in the options market for this. So I was forced to sell. And you can see here, like, I sell calls, I buy it right here. Let's see. At $20. So it's above that price right now. Could be selling for a profit, but I'm not. And we'll see. I've been trying to sell calls and hopefully triggers that and sells more shares, but it's just not happening. I'll keep trying. RSX went up. I try to sell a call against that as well. RSX is the Russian market ETF, exchange traded fund. Collection of stocks tracking the Russian market, roughly. It gives a really nice dividend that comes in at the end of the year. I really like the Russian market and I want to keep it for a long time. So far, it's been really good to me. Since I've held it, I'm up 7.86%, $35 today. And I've sold some calls against it as well, which has given me additional income. So that's great. But I can't fill it. It's just been a lack of liquidity. I can't seem to fill. Oh, look, the midnight happened, so now the day is clear. There's actually zero data out here because it just ticked midnight. It's now officially April 17th in the West Coast here. And that's about it for the big movers. Chemical down 10%, URG down. Oh, I'm sorry. Energy fuels, huge down move of 11 cents. It's actually quite a bit. It's 3.5%. And it gets me closer to that $2.5 level, which is bad for me because if it reaches it in a couple of days, you know, I'll be on the hook for some money here. I'll have to buy, actually. I'll be forced to buy 400 shares, which is fine. I would totally buy them at 250, even though my average cost right now is 225. I have 600 shares. All right. So that's about it with the accounts. Those are the big movers, and this will happen. So what I want to talk about is price and how important price is for stocks and really anything that's out on the open market that functions in a free market, right? Including businesses, including stocks. So one thing that it took me quite a while to realize, and I knew it from early on, but it took me quite a while to actually realize and sink into my head, is how amazing price is and how everything, every single little piece of data, especially if the stock is liquid, is actually factored in to the stock, including probabilities, right? So anything you can think of, anything from potential supply disruptions, right, or anything to even as far as like Federal Reserve interest rate adjustments is factored into the stock. You know, expected demand, the percentages of what the expected demand is in a specific country, a specific region, you know, anything, a shift in management and how one CEO is likely to operate the company versus another, right? So think about it this way, just on that one point. If Tesla's CEO stepped down right now, right, if Elon Musk got, you know, fired or stepped down, then the company's share price would move in a very drastic way, right? Many people are making bet on Elon Musk rather than the company itself. They just think he's an amazing guy and he's able to sell, you know, do miraculous things, and that's fine. But is that going to be the same if he used to step down and say, oh, well, I'm going to go just work on SpaceX, a different company, and I'm just going to hand over Tesla to my buddy who's going to maybe ruin it, right? So, I mean, or do a lot better. Who knows? Some people might argue that a different CEO would do better with Tesla. I'm not saying that either one is good or bad. My point is, anyways, that the price will move very dramatically. Some stocks are not affected by a new CEO, right? So if a new CEO came into Coca-Cola or some more well-established company, like, people wouldn't really care that much. The transition between, you know, Steve Jobs to Cook wasn't that dramatic. So whenever you have a shift in, like, you know, Goldman Sachs or anything like that. It's all these well-established companies that are meant to be run very smoothly, no matter who is in charge. It won't have a big impact, and that's also factored into the stock. Some people may prefer to trade the stock at a premium for that. I mean, we could just go on and on. I mean, whether the stock is cyclical or not is priced into the stock, right? Whether it has a moat, right, or not is priced into the stock. Um, their region of operations price, like especially for mining stocks, if they're operating in Africa or some really questionable um, jurisdictions in Latin America or something like that, or in China where the likelihood is for the mines to get nationalized, the resource to get nationalized, which means basically taken by the country, then the stock would trade at a discount, right? If it's a U.S. traded company and the company operates in the U.S., is going to trade at a premium relative to stock because that political risk, right? That risk of seizure is not in there, so it's not factored into the price. So anything like dividends, okay, what the dividend is like, whether the company is likely to um, give dividends for 30 years and grow their dividend, whether or not the dividend is expected to grow or not is factored into that stock. So what ends up happening is that whenever there's some kind of news that comes out for the company, the reason why they move so drastically is because there needs to be a quick repricing of all these expectations that people have in their own little models, right? So you have your own model of what you expect. Like, let's say you're a long-term investor and something happens that knocks the viability of the company that you own as far as its long-term prospects. So you're going to readjust, you have to readjust that thought. Maybe you make a slower move, but a lot of people try to front run that trade. If you're a trader, you can front run your decision. They can front run your decision. So when you finally decide to drop the stock, you end up dropping at a much lower level, and that's kind of what traders do. They provide liquidity for that and try to profit off of it. So if you're a short-term trader, maybe you don't really care about that. If you're a short-term investor, let's say, you don't really care about whether the company is going to be giving money or doing well in the very long run. You just care about next quarter, and next quarter looks to be fantastic. So, you want to take that huge dividend or something that they plan on giving. So it might end up working in positive territory for you. So now you have, all these, everybody's selling and buying based on their personal biases and their investment models and their strategies and what fits into their idea of what an investment looks like. And so it's the combination of all of these heads, butting together in a market that establishes the price. So that's why pieces of information that pertain to the performance of the company are so important, and they move the stock dramatically, sometimes 50, 100 or more percent up or down. Well, you can't go down more than 100%, but you get the point. And it's just really amazing. So make sure that, like, when you're investing, try to have a model that's a little bit unique, because following other people's models will usually land you in these camps of will lend you prey to the traders, basically. That's kind of what's going to happen. So really, you need to find your own unique way to maneuver through the markets. And I talked about edge before. I have another video on edge. I think you can look it up, but I think that's my opinion. Of course, I'm just a retail investor like you. I'm no Warren Buffett, and I'm not like a financial advisor or anything like that. But so this is just my opinion that you're better off going with your own edge, finding your own, making your own mistakes and finding what works for you and what you're comfortable with, because only you know your own circumstances and no one else knows them better than you do, and what you're comfortable with and what your risk tolerance is, etc. And what your strengths are as an investor, right? Everybody has different strengths and things that you can lean on. So anyway, I just want to talk about price and how important it is, and how everything you can think of, from the taxes to what kind of type of business it is, everything's factored in, and anything that you might even think of that you think you have an edge, like someone else probably already knows that. So if you're the best analyst in the world, you have another 1,000 analysts analyzing the same stock as you, especially if it's liquid and popular. and so all their opinions are also factored in the people that they work for, right? So it's hard to get an edge out there. You have to really know something that nobody else does, or have a model that's different than somebody else. And since we're not omnipotent, right? We can't. Or what was the word? No, omnipotent was being able to do everything. Omni, whatever, knowing everything. Okay, we can't know everything, so it's better to have a model or approach in investing that's different than everybody else, because that's what's going to grant us the edge at the end. All right, good luck, y'all. To hopefully you're all getting to 1 million just like me. I'm trying to get this account to 1 mil. We'll see if it happens sooner or later, but it's definitely happening. All right, I think that's it for now. Peace out.